two distinct and very important conversations to had with our next two guests. One, how the month of October has been with regards to the redemption pressures, if any, that mutual fund houses faced, both on the equity and the debt side, and the liquid category as well. Viewers would remember that the liquid category was the one that had some pressures in the month of September. Two, what happens to the rollovers in the commercial papers for the NBFC segment that come out over the course of the next fortnight, arguably until Christmas as well. Swarup Mukherjee himself was saying that a large number of redemptions or rollovers are coming up in the next 45 days. So what would fund houses' positions be as well? To talk about all of this and more, two very special guests, Radhika Gupta, the CEO of Edelweiss Asset Management, and Swarup Mohanty, CEO at Mirae Asset Global Investments. Both of you, thank you so much for taking the time out and being with us, and to you and your teams, from all of us here, a very happy Dhanteras. Radhika,
thank you for having us.
Yeah, pleasure having you. Radhika, let me start off with you first. How was the month of October? Because at the end of September, at the beginning of October, people were divided in the opinion whether the pain that we saw in the month of September would last and would actually worsen. I don't think that has happened. But how was October, both on the debt side and on the equity side?
Sure. So, Neeraj, a very happy Dhanteras to your viewers. As far as October is concerned, obviously, I think you saw a continuation of what happened in September spill into October. Now, as far as flows are concerned, there are three parts to it. There's equity, there's fixed income, and then there's liquid. Liquid saw, you would recall, a material outflow in the month of September to the tune of 1.5 lakh crores. And some of that is seasonal because of advance tax, and it comes back in October. What has happened is in October, money has come back. So about 50,000 crores odd has come back into the system, but it's not to the tune of the redemptions that you saw in September. So is that great news? Honestly, it's not. Money did come back, but it didn't come back wholeheartedly. In fact, a lot of it, I think, was left in the banking system. Second piece of news is around fixed income, which is the non-liquid category. Again, there in September, you saw outflows, and in October, you continued to see that trend of outflows. Obviously, it's been a rising rate environment. Plus, there's been some challenge as far as some of the funds that had ILNF kind of exposure. So you saw about 20-odd thousand crores, as I understand, of flows going out of non-liquid fixed income. I think the good news is that the equity category, which is your retail equity flow, has remained reasonably stable. So at 8 to 10 odd thousand crores, which is where that number will probably close for the month, even accounting for a few large NFOs, I think retail equity flows were actually not that bad in the month of October, which is a very, very encouraging sign. And I think that's because of the fact that we have still today a large SIP book of almost 8,000 crores.
Swarup, a glass half full can also be always viewed as a glass half empty. I think Radhika makes some telling points, two worrying points. One, on the liquid category, while there has been inflow, it is not to the tune of the entire outflow that happened, or not even close to that number. And two, that the fixed income category continues to see outflows for 2 straight months. If I'm not wrong, and if I'm understanding Radhika's number correctly, the number in the month of October is probably higher in terms of outflow than on the fixed income category than what happened in the month of September.
I think what Radhika says is correct. Some amount of the money which went out last month did not come in. That's whether it's right or wrong, I'm nobody to comment. The way I look at it from a mutual fund perspective is, see, it's a liquid category and it's meant to be money at call, which is supposed to go back. And I think from that perspective, the industry was tested last month. It continues to be tested this month on whether it can repay on time or not, and it continues to repay without flinching. Yes, the pressures have been there, especially on the liquid side, and there is a fair amount of uncertainty in people's minds, and I think people should have a little bit of comfort on that, on whether the money is parked in mutual funds can be got back or not. And I feel the industry stepped up the ante on that, and it's been able to pay on time, and it continues to do so. That's from an AMC perspective. Having said that, what Radhika also points out is a silver lining on the entire thing is the equity side of the business, which is going robust day by day. There is a distinct change in behavior, both from the advisors and the investors, which is leading to this continued flow in spite of markets being topsy-turvy. If I remember right, if you went back just 4 or 5 years ago, this wouldn't have been the situation. But the conviction levels in equity continue to grow day by day. And I'm very happy to witness this within my working life because, finally the asset class of equity is the asset class of wealth creation, and people will make money if they are invested in the market. And if they are invested in markets like this, and that's coming out loud and clear.
Over the last few weeks, and there have been events which have started to make things look a little less gloomy. In light of that, Swarup, I'll stick to you. Does this instill slightly more confidence now than people had before? And then redemptions on their own can sort of see that little bit of a halt?
See, there is a question mark which has been raised by investors on the capability of certain issuers. To be fair to those issuers, they have come out very robustly in the market and are going about paying on time. There has been just one instance of Island FS not standing up to its commitments, but the rest have all stood up to its claims. We are seeing every day some kind of issue up for repayment, and it's coming through pretty seamlessly. So once this period is tested and it comes out clearly, I think the investor sentiments will come back. Yes, I think the issuers and the AMCs are working very closely to not let a sort of liquidity hangover being created, and that's will lead to more and more satisfaction to investors. It is that period. We are going through that, and I'm sure we'll come out of it fairly stronger.
Radhika, with the CP redemptions lined up till the end of the year, do you see more mutual funds redeeming or rolling over?
See, I think, I can't comment on individual funds, but what I would say is that, and just to echo what Swarup said, is that the MF industry has seen multiple liquidity crunches. We all remember the post-taper tantrum period in 2013. We see the period now. I think the MF industry has seen various liquidity crunches. I think each mutual fund house will take their own call as far as the kind of exposure they want to keep to some of the segments as far as HFC and NBFC are concerned in their portfolio. What I would re-emphasize is what Swarup said, is that right now, with the exception of one issuer, all the rollovers that are happening despite the noise are actually happening very smoothly. So from an AMC point of view, there's been nothing to worry about. AMCs are working hand in hand with issuers as relevant to make sure that things go through smoothly, and every amount of redemption every rollover is getting processed, and every redemption to a customer is getting processed despite the state of crunch. So we are actually in very, very safe hands from that point of view, and hopefully that will continue through the month of November. And if it does, by the way, I do feel like this little sense of panic or concern that happened around liquid funds and fixed income will ease itself. We're already seeing a few signs of that, and we'll probably be back to normal hopefully in the last quarter of the year.
Radhika, am I understanding this correctly, that despite the outflows that the industry by and large seems to be facing, you mentioned the fixed income in the liquid category as well, that's happened in the month of October, you, for now, as things stand, don't foresee a problem in the rollovers of the CPs that are coming in from NBFCs? There could be a select one or two which might, but by and large you don't see problems.
I don't. In fact, there have been a number of rollovers towards the end of October. A number of maturities are coming up in November. And so far, so smooth. So everything has happened very smoothly up till now. And in any conversations, there's nothing one has been given to understand that should make one worried. Obviously, markets are very, very dynamic, and, things change on a day-on-day basis. But as of now, I think things have been happening very smoothly in the last week, and one was expecting that to continue over the next week or two as well.
Swarup, there was an article, and the reason why I can ask openly to the two of you is because the article seemed to suggest that there was inflows in the liquid category, I presume, of HDFC, AMC, and the article seemed to suggest that bank-based AMCs are getting inflows where others are not. Is that as black and white as that?
Question to me?
Yes, Swarup.
Yeah, see, there seemed to be a distinct flight to safety from investors. both at a retail level as well as the institutional level. Some segment of the institutional levels are now parking their money in CBLO and not coming back to the funds, as the flows this month suggest. So, in what is safety is left to the perception of the investor. I mean, at the end of the day, it's safety of the portfolio rather than anything else. It's that period, as Radhika is saying, that this first 15 days of November will change a lot of things once most of the maturities come back to the funds, and people realize that things seem to be settling down. There was a rightful question when one large issuer defaults, and it should be questioned. There's no doubt or debate on that one. But it's up to funds and the issuers to respond in a collective manner, and I think they're going about doing that. At this moment, to answer your question, yes, there is a distinct flight to safety from investors, and I'm not singling out retail or institutional, from both sides. And that's reflected in some of the AUM movements that you're seeing across the fund houses.
I think it'll be really important as well to have that behavior coming in, because that gives a bit of a signal as well. If AMCs are able to roll over, and rightfully so, some of the papers that comes in, I think it just brings about a distinct change in the sentiment. If there was a sentiment indicator, I think it'll go up a few notches post the 15th of November once these rates go out. My final question, Radhika, to you, and that is on the silver lining, which is the equity flows. They stay stable, not without reason, but they stay stable. Do you reckon that those flows continue or pick up pace as the markets seem to be showing some signs of revival?
Flows will continue to be stable. I think, to echo what Swarup said, there's been a distinct change in investor behavior and more so advisor behavior. I think when you talk to good quality advisors across the country as one travels, you don't see a sense of panic. In fact, a lot of people talk about the fact that there is opportunity now, that customers are coming in at potentially better valuations. Also remember, Neeraj, a lot of the flow has come in through the SIP route, and that automatically reduces some of the element of volatility. So investor returns, while mid-cap and small-cap indices may have corrected 20-30%, investor experience has been a lot smoother. So yes, do I expect that number to continue? Absolutely, because so much of it is driven by SIP flow. And as he said, over the last 3-4 years, there has been a marked shift in investor and advisor behavior, one towards sensible investing, and secondly towards broadly quality investing.
Radhika, staying with you, I mean, of the CPs that we're talking about that are up for maturing within these few months, about 40-42% are NBFCs and housing finance companies. With the measures that have been taken of late, do you see the quality being an issue for any of the mutual funds, and whether or not there is a viable option for redemption and then reinvestment somewhere else?
So I think the mutual fund industry is not short of options. I don't think you can, because of a single issue that happened in September, write off a broader NBFC and HFC segment. Is there concern around the segment because of flight to safety and whatever happened in September? Yes. But is there anything wrong? Absolutely not. In fact, a lot of NBFCs and HFCs have gone back and done early buybacks of commercial paper in the last 2 weeks, which should give more confidence to the market. As funds choose to make the decision about rollover or not, I think good quality NBFCs, people will continue to roll over. There's no reason that they will not. Perhaps select ones mutual funds will not want to hold in their portfolio. That's an individual call. Even if they were not to, I think there are enough options outside that space for mutual funds to look at, outside the NBFC and HFC space. And this is a point of time where, for investors, I think safety is of the premium. So even if you're doing a couple of rollovers or fresh investments at slightly lower rates, I think funds will be comfortable with them. The more important thing is to give comfort to investors about the quality of our portfolios.
Swarup, do you agree with that? Because up until now, NBFCs, with the kind of growth that they have been showing over the last few years, have been one of the key drivers in most of the portfolios, even within the lending system itself. So for mutual funds to take a call on whether they want to divert funds is going to be a bit of a challenge.
No, I agree with Radhika on there being more options in the market. Having said that, there is no financial report which is suggesting that there is a financial issue on the balance sheets of most of the NBFCs we invest in. It's a liquidity factor which has affected and created this situation. I think once the liquidity eases out, we will come back and reassess the situation. Yes, it's up to each fund house to realign their portfolios according to what they want their portfolios to look like, and depending on the risk profile of the fund itself. And that will play out. I don't see it much of a problem at this moment, because there is a lot of talk, but at the end of the day, please understand, as Radhika rightfully pointed out, most of the issuers are coming out and prepaying it. In fact, most of them have come without a rollover option in the last 15 days, just to show the comfort of their payment capacity. I will take it at face value, and if we are getting back our money on time, I will read it as that and not read too much more into it. So let time play through this, and I would like to conclude on anything as it stands. I mean, it is on a daily basis, especially the liquid fund investors who come in expecting the money to go out tomorrow, and that is being serviced as we speak. From our side, we've not seen a stress on the redemptions or rather, an issue with any of the issuers. We see a lot of maturities up till the mid of November, and we see all that being serviced. Having said that, if you look at the equity side, I think that's where the real play is. And from our side, we gave out a buy call last month, and it's been a fantastic call, as Radhika rightly pointed out, on the change in behavior of investors and advisors. People responded, and it was a great month for us last month on the equity side.
Okay, let's hope no bad events, if I can use that term. We need a happy festive season, and boy, we can use one this time around. Radhika, Swarup, thank you so much for joining in today and giving us your perspectives. And once again, to you and your teams, from all of us at Bloomberg Quint, a very happy Dhanteras and a very happy Diwali.
Yes, wish everyone a very happy Diwali. Thank you so much for having us.
Happy Diwali, guys. Thank you.
Thanks for joining in.